Hi, this is Thomas Wood with Microquant. Once again, we're going to be taking a look at the Value Charts live trading room trades of the day for March 18th, 2013. Had a great day today. We were up just under $3,000, trading only 1 and 2 contracts at a time. And the majority of those gains were from RBOB for me personally, but I know a few people in the trading room are up even more than I am. I know one guy that made $5,000 off of just one trade, and that was in heating oil, and I'll explain that here in just a minute. So I'm just going to outline very quickly a few of the what we consider the trades of the day. The first one is going to be a short in natural gas, right where this red arrow is. The reason we were taking the short there is due to a bearish divergence on this 15-minute chart where we were moderately overvalued, equally high highs with a lower high on the MQ momentum indicator. Ended up being a great trade. If you're still holding that short, you're in it from around 9.6. Current price is 9.0, so you're up about $600 a contract right now. At one point, you were up around $750 a contract to the downside, though. So very nice trade there. And that was a short in natural gas, again off the 15-minute bearish divergence. The next one that I'm going to point out is the long in heating oil. And we had a long in heating oil off of an hourly bullish divergence. So if you look at the 60-minute chart, we came down, we had support here drawn across the lows, and the reason we were saying that was support was due to a few previous days that had bottomed out there and bounced the price up a couple times. Now we saw it spike through this, but when it didn't continue on running to the downside, we said, okay, it could very well turn around and reverse. So watch for momentum to shift, watch on a shorter time frame for it to roll over and start heading higher, then we can potentially get long. And again, that got you long from around 2.895 area, and it went all the way up to a high of 2.943. So almost 600 ticks there at $4.20 per tick. So a very nice trade to the upside. We covered at significantly overvalued at the upper end of that 60-minute bar. Now the last one I'll talk about is again in heating oil. We had some great trades in heating oil, both long and short. Initially, the first one we had was a long in heating oil off of this bullish divergence on the 30-minute chart where we were moderately undervalued with just about equally low prices and a higher low indicator. As soon as momentum started rolling over, we went long. We covered and reversed up here at the highs. And the reason we reversed is we had resistance at the highs. We also had a value candlestick reversal pattern, which we call a red hat doji, a great reversal pattern. This is an RBOB on a 30-minute chart. We reversed that and went short and covered the short and talked about going long. I personally didn't go long the last time, but we talked about going long at the 3.2 or 3.13 support level from the intraday highs here. Ended up bouncing right off of that, going all the way back up to 3.1475, so about 175 ticks there, which is about $600, $700 a contract back to the upside again. Overall, a very good day for trading RBOB, for trading crude oil. We had a great trade in crude oil. We're up around $2,000 a contract in crude oil to the long side. At one point, ended up being a very good trade. We had some nice scalps in crude oil as well for shorts. Had many other good trades as well. And currently, we have an open position of short wheat, which we're up a few ticks with a break-even stop in place. So we'll see how that plays out. But if you want to learn more about how to trade these divergences, these bearish and bullish divergences, I would suggest joining us in the Divergence Workshop coming up here in April. You can find out more information about that at valuecharts.com. And until next time, happy trading.